Filing your taxes can be a daunting task, but with the right tools and information, it can be a lot easier. Today, I'm going to share 5 different areas that you need to pay attention to make your filing a lot more successful. Hi everyone, I'm Sean with Families Creating Financial Freedom, and today I'm going to talk about 5 areas that you need to examine more closely in preparing your taxes. This could be critical in hopefully increasing your refund, but certainly reducing what you might need to pay in taxes. Taxes don't have to be intimidating, but these areas can really add up and make a big difference. So you want to stay tuned and watch all the way to the end because you don't want to miss a thing. Grab a pen and a piece of paper so you can take notes, and let's get going. Number 1, I'll keep this short. Consider your filing status. You want to examine. If you're married, it's easy to just assume you should be filing as married jointly. But if one of you makes a lot more than the other, you have different write-offs, it may be more efficient to split it and file married separately to take advantage of everything. So compare. Number 2, don't miss tax deductions. I'm going to glance at my list just to make sure I don't miss ones I want to highlight to you. A, taxes paid in the state you live in prior to this year's return. So remember, last year you probably had to file state income tax as well as federal income tax. Well, if you paid state income tax, you get to deduct that from your taxes the next year for paying it within that year. You don't want to miss that. Every little thing counts. 2, earned income tax credit. Important thing to look at. 3, charity donations. That doesn't always mean you wrote a check. That could be making physical contributions like donating to the Salvation Army or Goodwill with clothes and goods, sofas, things like that. You might have even done something huge like donating a car to a nonprofit. You don't want to miss that write-off. There are certain rules, so I suggest you research on IRS's website as to exactly how you track and account for that write-off. Another one, real estate and personal property taxes. Depending on where you live, you may not have state income tax, and as a result, your real estate and personal property taxes may be higher. So you want to include those on your federal taxes. Student loan interest. If you have those wonderful student loans, 2022, you probably don't have any interest to deduct, but prior years and in future years, more than likely you will. You want to be sure to include that. Contributions to 529s. Look at what your state rules are to see if you can deduct that in your state. You should know from when you opened up the account. Also, sales tax. Look at the IRS's website. They have a calculator to help you determine an idea of what you can deduct on sales tax. And then child and dependent care expenses is another area often missed that you can include. 3, easy, low-hanging fruit to remember, but it requires you coming out of pocket. Make sure if you have an IRA or an HSA that you maximize your contributions to those. You have until the day you file your taxes to maximize those contributions. At the end of this, I'm going to link a popular video that I did on HSAs that just give you a review on it. You should know if you have an HSA or not. But if you don't and you're unsure if you should, you want to watch the video. You'll find it beneficial. 4, don't miss tax credits. What are examples? This year, if you bought an electric vehicle, certain electric vehicles provide tax credits. If you installed solar at your home, that provides this huge tax credit. But other little things can also apply. Like if you replaced appliances, older appliances with updated, more energy efficient appliances often will provide a tax credit, but you need to look it up to verify if the model you bought applies. Another tax credit are education credits. The American Opportunity Credit and the Lifetime Learning Credit. The American Opportunity Credit is for working on a 4-year degree, your undergrad out of pocket, and the Lifetime Learning Credit is for working on advanced degrees. I'm going to include a link to the IRS that will help you access all the different areas I've referenced you looking up on the IRS website, just so you have quick, easy access and know that you're going to the right website, not versus some offsite that represents themselves as being the IRS. You don't want to confuse that. So I'm going to include the link for you. The fifth area, and after the fifth area, there's going to be bonus materials, so keep watching. The fifth area is timing. So if you have a mortgage and you normally make your mortgage payment on the first or the second of the month, you are able to add up and write off the interest you pay on your mortgage. But if you have a higher earning year, you may want to write the next January's payment on the end of December, so that and get it to them before the end of December, just so you have a 13th month of mortgage interest to write off. That can make a difference. What if that little bit of interest took you down into the next lower tax bracket and saved you money? You definitely want to explore that. You may feel like the next year is going to be a higher earning year, and you don't want to do that. I tell people, think big picture when it comes to taxes. Don't just think small picture. Now, I promise bonus material. Here is my big recommendation, and I may take some heat for this. I have a lot of clients that like to use software, online services to do their taxes, and a handful of them end up calling me and wanting me to hold their hand through filing those forms. I'm not a tax preparer. I'm not an accountant. I'm a financial advisor. That's not my role. I try to help my clients where I can. But that free software or that low-cost software, oftentimes you have to pay extra to access services and modules that really apply for you. And so you end up paying a lot more than you expect. I recommend you using a professional tax preparer or accountant. I'd even go so far, nobody get offended, in using somebody that doesn't just do it seasonally, takes a course, shows up in office, does taxes, and is gone for the next 9 months out of the year. But an accountant, somebody that really sees the IRS updates, rules, changes throughout the year, knows their way around the forms, not just filling in the fields and software, really can add up and make a difference. And from my experience, and every one of my clients have taken this advice, they have saved more money than it costs them to pay for that person to prepare for their taxes. That's my big bonus advice. If you don't have someone, ask your friends. I guarantee you several of them will have some solid recommendations of people in the area that will do it for you. I hope this has been very helpful. Also, in preparation for next year, make sure you have a budget and you track all your expenses ongoing throughout the year and work towards debt elimination. You can follow my link to Rocket Money or sign up and take my course where I provide the tools and the training on how to develop and track your budget. Until next time, I hope this has been helpful. Take care.